Hello everyone, today is Monday, December 22nd, 2025, Eastern Time. Welcome to Panda Finance. Let's take a look at the top 10 global corporate news stories from the past week. Here are the details. Nvidia has yet to pay OpenAI a single dollar. Nvidia chief executive Jensen Huang said the company has not yet transferred any funds to OpenAI, despite having announced plans to invest as much as $100 billion in a joint effort to build hyperscale data centers. Speaking publicly, Huang emphasized that the partnership remains at an early stage and that capital will be deployed gradually, in line with project milestones and technical requirements. The two companies unveiled what was described as an epic strategic alliance in September, positioning the collaboration as a cornerstone of next-generation artificial intelligence infrastructure. For now, however, the investment remains largely notional. Micron storage chips are completely sold out as demand surges. Micron Technology reported stronger than expected demand for its memory chips, driving a sharp rise in its share price following the earnings release. During the earnings call, the company said data center demand, particularly from artificial intelligence servers, has become the primary engine of sales growth. Our products are already fully sold out, said Business Unit President Sumit Sudna, adding that the supply gap remains substantial and is likely to persist for the foreseeable future, underscoring the tightness of the global memory market. TikTok signs agreement to form United States joint venture. ByteDance has formally reached an agreement with investors to establish a new United States joint venture, named TikTok USDS Joint Venture LLC. Under the deal, a newly formed investor consortium will own 50% of the entity, including Oracle, Silver Lake, and Abu Dhabi Investment Fund MGX, each holding 15%. Affiliated entities of ByteDance's existing investors will hold 30.1%, while ByteDance itself will retain a 19.9% stake. Other United States-based TikTok entities fully owned by ByteDance will continue to manage e-commerce, advertising, and marketing operations. iRobot files for Chapter 11 bankruptcy protection. iRobot, widely regarded as the pioneer of robotic vacuum cleaners, filed for Chapter 11 bankruptcy protection in Delaware on December 14. The company said it has entered into a restructuring support agreement with its secured creditors and primary manufacturing partners, Shenzhen Shanchuan Robotics and Hong Kong Shanchuan, collectively known as Paisia. Under the terms of the agreement, Paisia will acquire 100% ownership of iRobot. In early 2024, Amazon had sought to acquire iRobot for $1.4 billion, but the deal collapsed following opposition from European regulators. Musk regains access to $56 billion Tesla pay package. Delaware's Supreme Court reinstated Elon Musk's compensation package from Tesla, which had been valued at $56 billion when approved in 2018. The ruling overturns a lower court decision from 2 years ago that had rejected the plan as excessively opaque. The decision marks a significant reversal after a judgment that drew sharp criticism from Musk and raised concerns about Delaware's reputation as a business-friendly legal jurisdiction. The ruling clears the way for Musk to receive compensation for his role in transforming Tesla into one of the world's most valuable companies. Ford to take $19.5 billion write-down on electric vehicle business. Ford Motor said it expects to record approximately $19.5 billion in charges, largely tied to its electric vehicle operations, delivering one of the largest asset impairments in the company's history. The move reflects weakening demand for electric vehicles and Ford's broader retreat from its earlier electrification ambitions. Since 2023, Ford's electric vehicle division has lost roughly $13 billion. The automaker is pivoting toward hybrid models, while production of the all-electric F-150 Lightning pickup will be suspended. Toyota to import United States-made vehicles into Japan. Toyota Motor plans to begin importing vehicles produced in the United States into Japan starting in 2026, including 3 models such as the Camry. The decision is partly aimed at easing trade tensions with the Trump administration, which has repeatedly highlighted the United States' trade deficit with Japan. The move will also expand choices for Japanese consumers. Honda Motor and Nissan Motor are exploring similar strategies, reflecting a broader shift toward increased production in the United States. The targeted models include the Tundra pickup truck and the Highlander sport utility vehicle. Pricing and sales arrangements have yet to be finalized. Volkswagen shuts down production line in Germany for the first time. Volkswagen Group has halted vehicle production at its Dresden plant, marking the first time in its 88-year history that the automaker has shut down a production line in Germany. The decision comes amid weak sales in China, sluggish demand across Europe, and pressure from United States tariffs, all of which have strained cash flow at Europe's largest car manufacturer. European Union eases effective ban on internal combustion vehicles. Under mounting pressure from the auto industry, the European Union has moved to relax its effective ban on internal combustion engine vehicles, granting manufacturers greater flexibility during the transition to cleaner transportation. The revised proposal softens the requirement to prohibit new gasoline and diesel vehicle sales starting in 2035. Automakers will be allowed to sell a limited number of new combustion engine vehicles, as well as plug-in hybrids and range-extended models, provided they offset additional emissions through low-carbon fuels or the use of locally produced green steel. Medline delivers the largest United States initial public offering of the year. Medline Industries, a private equity-backed medical supplies company, surged 41% on its first day of trading after raising $6.3 billion in its initial public offering, the largest in the United States this year. The offering was priced at $29 per share, near the top of the expected range. Shares closed at $41, giving the company a market value of approximately $75.7 billion. The listing, backed by private equity firms including Blackstone and Carlyle, is widely viewed as a barometer of the health of the nearly $4 trillion private equity industry. Thank you for tuning in to today's financial news. We look forward to seeing you again.